Here students, today we are going to study the amount of stationery to be debited to income and expenditure account during a particular year. For that, we have to take actual payment of stationery made during the year from a receipts and payments account. That is, from the payment side of a receipts and payments account, we can find out the total amount paid for the stationery during the year. To that figure, we have to make adjustments of 6 items. These adjustments should be made, and the amount so received is the actual expenditure of stationery, not the actual payment. Actual expenditure of the stationery to be shown on the expenditure side of income and expenditure account, or amount to be debited at stationery during of the current year on the debit side of income and expenditure account. So these 6 items is adjusted to the actual payment of stationery, actual amount paid for the stationery during the particular year. So all the expenses, all the expenditures that is of the current year may be added to all the expenditure belonging to previous year, and the coming year is deducted. And the resultant figure will be actual expenditure of stationery to be debited to income and expenditure account. So what are they? What are those adjustments? And for that, as told earlier, when we prepare the subscription, we have to make a statement. And the first item to be shown in the statement is actual payment of stationery made during the year. That amount can be taken from receipts and payments account. That is, on the payment side there will be stationery, that amount may be taken. So amount shown as payment made for the stationery during the year is the amount as shown in receipts and payments account on the payment side of receipts and payments account. To that figure, to that actual amount paid during the year for stationery, we add, first item, we add the stock of stationery on the opening date of the current year. The stock of stationery, that is opening balance of stationery on the opening date, would have used for the current year itself. So amount as opening stock of stationery may be added to. And the second item is amount of stationery due on the closing date. That amount should also be added to. So first item is opening stock of stationery, and the second item is amount outstanding on the closing date, and the third item is stationery amount paid in advance. That is, prepaid amount of stationery on opening date may also be added to. So these 3 items, that is opening stock of stationery, and the next is amount of stationery paid in advance on opening date, and last one is amount outstanding for the stationery on closing date. These 3 figures may be added, and the last 3 figures are the figures to be deducted. There, first one is the stationery amount of stationery outstanding on the opening date. Outstanding on the opening date should be deducted because that belongs to previous year. And the next one is stationery on the closing date. Closing date, amount of stationery on closing date should be deducted. The first item is opening date, outstanding amount of stationery, and the second item is stationery on the closing date, and the third item to be deducted is closing date balance of paid in advance for stationery. Stationery amount paid in advance during the closing, that is the balance of paid in advance amount on closing date should also be deducted. When we adjust these 6 items to the payment of stationery made during the current year, we get the actual amount of stationery to be debited to income and expenditure account of the current year, and the same is that is the amount to be shown on income and expenditure account. Thank you.